The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Masters Show, folks. I'm Steve Rhodes. Tom will be joining us in the first break, right after the first break, so in about 15 minutes or so. Right now, let's go take a look at the markets. We've got the Dow up 3 points. S&Ps are basically flat, up 18 cents. The Composite up $4 and change. The Russell 2000 up 60 cents. New York Stock Exchange up 76 pennies out there. NDX up 5. If we take a look around the world here, you've got the FTSE just went positive. FTSE is up 2 points. The DAX down 18 points out there. King Dollar up 27 ticks. Our call-in number is 877-927-6648. Let's go take a look at the Dow. Let's see what the Dow is doing here. It's trading at 13,182. The swing point that is trading into with light volume, as you know, is the May 1st swing point. Now, the low of that May 1st swing point, 13,174.65. It is trading right now at 13,184. You rejected that swing point twice. Yesterday, the actual close was 13,175.64, so it closed inside it. That still keeps alive the possibility of the Dow making a 1-to-1 A to B equals CD. That would take the Dow up to the 13,313 level. If it does that, well, then it will certainly go tag the May 1st high out there, that May 1st high being 13,338.66. That's actually, if you're bullish, not what you want to see happen, because the bulls are looking for what? They're looking for quantitative easing. You don't really think you're going to get quantitative easing with the market moving up into the 13,000 area, do you? At least I don't think that that's the expectation you should have. That's why you've got such light volume out here, because the big money is sitting on the sidelines saying no, 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 no. And then we take a look at big money being in the currency side of the trades out there. And we take a look at the currency side of the trade. We're taking a look at the euro, what I was showing during the 9 o'clock show, the 9 to 10 o'clock show that I do, the Trader's Edge show, folks, which you can always catch the archive of that on Channel 9. We saw the euro. I'll put this thing on a daily chart out here. So let's do that first. We'll pull up the daily chart. The euro here making a retracement off of its last move up, making a 0.382 retracement off of that last move up. If you take a look at that, that's coming off of the low from July 24th out at the 1.20411, all the way up to the doji high that it made here on August 7th out at the 1.24407. Then you just simply go from low to high, use your retracement ruler, put down the three numbers on there, 382, 618, and 786, and what you had was you've had the euro so far move down into that 0.382 area. Now, as it was doing it, that's why I had the 10-minute chart up there. What you had as it was making that low, it was creating a hammer candle. That is a beautiful candle out there. That gives you a sign of reversal. Normally, when you hit the 0.382 area, I do say area, that's why you want to go take a look at candles. That's why you want to drill down more on an intraday basis. When you get down there, you're going to find that it's going to bounce. Now, what's really key here is what kind of bounces it's going to get. Well, it made that hammer candle. It did it right at about 9:30 a.m. on the dot. And right now, your area of support here is going to be the low of that session. If you get a close below 1.22850 at any point here in the very near future on the euro, that says if you're long, you're wrong. That's how powerful those hammer candles can be, and that's how you put together the daily and an intraday chart out there. And the King Dollar, after making that 3 drive to a bottom pattern out there, showing the strength inside the U.S. dollar index. Now, if we go take a look at the U.S. dollar index, it should be doing roughly the same. We're going to go from the high out there on July 24th out at 84.25 down to the low that was established on August 7th. You can see King Dollar's got more room to the upside before it gets to the 0.382 retracement, that 0.382 level being 82.90 out there. What we are taking a look at is the real possibility here of this 3 drive pattern truly setting up a larger A to B equals CD off of the May 1st lows, if not smaller A to B equals CD patterns out there. That says you've got to absolutely be careful. Let's go take a look at natural gas. Let's go see what nat gas is doing here. Natural gas having made a really nice 1 to 1.272 A to B equals CD pattern out there. Let me just make sure I refresh this screen here and get everything. Natural gas, then what does it do? It pulls back to that 0.382 level. So you can watch just simply the breathing pattern, the normalcy that exists inside these markets out here. And so that 0.382 level is, I got the UNG up on my screen. No wonder that didn't look right. Let me put so let's just go with the UNG. That's fine. Let's just take a look at the UNG. So we're taking a look at the UNG, that making a 1 to 1.272 A to B equals CD, just like natural gas did. And then it pulls back, and you really want to be able to trade the UNG. You've got to be taking a look at the natural gas contract. That is where you're going to get your information from. However, it still pulls back to that 0.382 level, 1930. Then it's bouncing just a bit here. If it doesn't bounce any further, you're going to see the UNG pull back much further than that. My target on that is the 1.618 level, but if all the retracement that it did was from 2 sessions ago, August 7th, what you will see in the 0.618 level is in that 1730 range. If that's the only retracement that it did, I would say that natural gas wants to certainly come back here and perhaps test the bottom of this breakout candle from June 14th. But we've got a long way to go before that occurs. If we go take a look at light sweet crude, let's take a look at oil out there. Light sweet crude right now trading out at $93.89. Light sweet crude has not backed off. Light sweet crude went into a bullish mode yesterday. Not that this hasn't been a little bit of a bullish pattern here, but when we take a look at lagging indicators, one of those lagging indicators being the moving averages. Let's go take a look at that moving average out there. I think I've got to draw this in. There we go, the 20 and 50 day. Let me put this on the chart here, put this on the screen if you're watching us on Tiger TV. So what you can see here with regard to light sweet crude, yesterday's session, as it just simply made a doji. Now, yesterday it made a doji candle, August 8th. It opened at 93.41. It closed at 93.46. Right now, trading at 93.90. And you also had the 20-day crossing over the 50-day. That was your lagging indicator out there. You get a doji candle. What's that? That means that's where you have equality between the bulls and the bears. That's what you had. You get a close higher today. What does that say? That says you may be really setting up an A to B equals CD up. This is going to be pain at the pumps here. And that A point on light sweet crude would be down at the lows of 77.70 on June 28th. The high that came in on July 19th out at 93.25. And then the low out here, I guess you would probably go ahead over here and use a low of August 2nd. That would send light sweet crude up to $102.48. Now, what else is up at 102.48? Let's just simply come off the swing point high from March 1st, 2012, when you had light sweet crude up at 110.87, come all the way down to the low, and what you'll see is you've got a 0.786 retracement where you have a 1-to-1 A to B equals CD. That says we're going to be paying more at the pumps out here. However, you need a higher close on oil today. So it is interesting out here. A little divergence. You've got oil trading up at 93.85. You got King Dollar up 25 ticks. So oil not backing out up there. Very, very interesting. I think it was Schultze that used to say that. We got to get Schultze's, got to get that little voice track on there, and so we can play that here when we find something that's very, very interesting out there. If we take a look at some of the stocks that are moving in the marketplace here today, you've got AutoZone now in second place on the way down. Monster Beverage number 1. That's trading off 6% here. That's down $4.48. AutoZone, AZO, the ticker symbol, they're down 1%. Let's go take a look at that stock out there. All of these auto parts companies having troubles out there. And when I say all, I mean AutoZone, I mean Advanced Auto Parts, AAP, and the AZO. And the other guys out there, why did I have a little brain fart, a little contusion there? O'Reilly Automotive. There we go. I knew I could get it if I focused real hard on it. So you got AutoZone trading down into this thing has broken down with conviction. Is trading inside the swing point low right now. That low, folks, is from June 27th. That had 2.1 million shares. So you can expect AutoZone to go down and test that low at 353.38. It's possible that you've got AutoZone trading in a little small little consolidation range here. Really can't get much of a bounce. It has not tested that exact low from June 27th, but you can't expect it to get down to 353.38 before it gives you its next signal. We actually put up some of those other auto stocks out there. Let's go take a look at those. Let's go take a look at AAP as the ticker symbol. That's Advanced Auto Parts. Now, if you take a look at Advanced Auto Parts, that thing here has got a to B equals CD down established in it. Let's take a look at what Advanced Auto Parts is doing. Advanced Auto Parts had its really large downdraft the day of the trading session of May 17th with 6.8 million shares. The low of that session, 67.22. You're trading inside it right now at 67.59. Did gap down this morning as well. Looks like if it can break that area, get below 67.22, it'll go test that swing point that's got volume down on June 27th. But if you do take a look at, and when you are trading, folks, when you are taking a look at entering a trade, and even if you're just taking a look at the daily chart, you really want to make sure you go and take a look at the weekly and the monthly. Always step it up a notch, right? Step it up a notch in life. In this case here, to step it up a notch, you would go into the weekly chart, and you put the weekly chart on this here. So let's go take a look at that, because that'll give you a picture. So the weekly chart on this showing what kind of candle, as it made that move down on June 29th. Yep, it made a hammer candle. It made what I call a type 1 hammer candle. Doesn't get too much better than that. It was, the high was 68.30. The close was 68.22. So it was just a smidgen away from a total type 1, the best kind of hammer candle that you can find out there. Now, as it was making that hammer candle, coming down with conviction. So in the case of Advanced Auto Parts, your support, if you are in that stock, is $60.87. You get a close below that. If you're long, you're wrong. It's really simple. That hammer candle should be very, very strong support on the weekly chart, on the daily part. You can see when it got down there, it was almost a 0.786 retracement, and that is the point where the bulls for the week truly stepped in. That was after a huge downdraft from the week of May 18th. That was on Advanced Auto Parts out there. If we go take a look at what else is moving here in the markets. Oh, how about that? Advanced Auto Parts happens to pop up on my screen here, also on the way down. Let's take a look at what is moving to the outside. You got Panel, Universal Display out there. PANL is the ticker symbol. Panel is trading up about 14% this morning here. So having a nice move out there. That's up $4.70. Nice wide-ranging bar out here. So let's go take a look and see what this is doing on all of the charts. We'll take a look at the daily. Take a look at, well, we're not going to have enough time to take a look at all the charts on Panel. Panel right now, what I can tell you, it's moving up into its swing point where it last had a downdraft. 1.2 million shares today. However, it is overtaking that downdraft from July 20th that had 1.1 million shares. So this thing here is now coming. Really, it's got several supply lines out here on Panel. Oh boy, does it have supply lines. 877-927-6648. Tom should be in here during the next segment. The Dow up 14. S&P's up 2. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Show, folks. Steve Rhodes here, and Tom will be in, we think, for the second segment. So he just finished up on a project here and couldn't get in before the break here. So let's go take a look at these markets. So you got the Dow trading up 15 points right now, and we're going to look at the diamonds first. The S&P is trading up almost 2 points. Composite up 8, small caps up a couple points. So let's take a look at the Dow Diamonds out here. Dow Diamonds trading out at 131.77. If we take a look at what the Dow Diamonds are doing, the battle is on with that May 1st swing point. The May 1st swing point high, 133.14. The low, 131.40. Volume, 5.4 million shares. Not really a ton of volume out there with regard to the Dow Diamonds as far as being able to break that up. The Dow should be able to do that easily. Well, what does the Dow do? It first breaks into it on August the 6th, so 4 trading sessions ago. Does it with 4.5 million. Fails on price and volume. Gets in the next day on August the 7th, right? So you got August the 7th, tried on August the 6th, August the 7th. So it was trying it on Monday, then tried it on Tuesday. Tuesday gets in there, 3.5 million shares. What do you mean? Volume is going down, and it closes below. Closed out at 131.38. Again, that low of May 1st was 131.40. Tested, failure on price and volume. Yesterday, however, it closed inside it. But with what kind of volume? Even lighter volume. 3 million shares yesterday. So we're talking about Monday, 4.5. Tuesday, 3.5. Yesterday, 3 million shares. What's it say when it's losing gas and it's getting into a swing point, folks? It absolutely says be careful out there. Now today, volume-wise, it has done 1 million shares in the first hour of trading. So not too bad. But pay attention to the Dow Diamonds out there. Why? Because it has been the lead dog. You close inside the 131.40 level. It most certainly says you can go ahead and complete that 1-to-1 A to B equals CD at 132.79 or even up at the high of 133.14 on that May 1st swing point. But it is getting up there without gas. It's like driving down a road and you're seeing all kinds of people on the side of the expressway without gas cans, not even gas cans. In this case here, it truly is running out of gas. Let's go take a look at the other ETFs out there. Let's go take a look at the week one. Of course, there's 2 week ones we can choose from. You can go to the IWM, so let's start there first. The IWM running into all kinds of resistance. So let's start with the first area of resistance right now that it's fighting. Supply. It's the supply line from April the 10th. That downdraft, that high, is $80.16. You're trading at $80.12 right now. That had 101 million shares. So you come up into that area. You do it on the 7th. You come up with 50 million shares, 50% less volume. You come up and you tag it on yesterday, 28 million shares. Oh, my God. You talk about light volume. Today, it's done 5.8 million shares in the first hour of trading. It does not have the gas. Can it go up on lighter volume? Of course, things can go up on lighter volume. It just says if it does, folks, you've got to be careful. You've got to be super careful. If you just take a look at the last swing point that it was going into, it was going into 49 million from July 19th. So on Tuesday, when it came in with 50 million, you were saying, okay, this thing wants to go at least tag that high. The high would have been 80.74. Of course, yesterday it was saying, maybe not so quick out here. And today at this stage, really the same thing. That is on the small caps. If you take a look at the if we take a look at the trend line off of the small caps, you can start with the trend off of the March 27th highs, use the high of July 5th, and you can see it doesn't even have the energy, at least yet, to get up and try to tag the top of that trend line. The May 1st swing point here on the small caps, and really, that area has already been tested on the small caps. The small caps got up and tested that area back in July, the early part of July, July 3rd and July 5th. When it was testing that swing point had 60 million shares. It tested it with 32 million. It tested it with 38 million. That's why the small caps don't have to get up there and test it again. It's already been tested. It's already failed at May 1st on lighter volume out there and rejected that area. So, when you take a look at correlations and you're sitting there saying, hey, all these other ETFs have tested the May 1st swing point, so will the small caps. Not so fast. The small caps already completing that test, now just dealing here with that just normal supply line. If we go take a look real quickly here at the Qs, let's go see what the Qs are doing. You got the Qs trading out at 66.83 out there. The Qs having a 0.786 Gartley pattern. That Gartley pattern still in effect out here. And if you take a look at volume over the last couple trading sessions, 28 million shares on Tuesday, 20 million yesterday. Today, got 5 million shares in it, folks. 877-927-6648. Dow's up 8 points right now. We'll be right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Show, folks. Steve Rhodes here, and Tom still not being able to join us. Not a problem. I got the ship here. You can give us a call at 877-927-6648. And as we take a quick look around the world, let's take a look at the Shanghai out here. The Shanghai closing up last night out at 2277.33, finally breaking through the swing point that it had been contending with on January 6th. That swing point low, folks, was 2234, and 2267 was the high. It did break out above that swing point. It was also going into a gap. Now, that candle that it's still trading inside right now is the gap down candle from July 20th out there. The Shanghai can break above the the area of resistance, which I'm going to use as July 19th out there. That would be the high of 2301.59. Then I would say we have a break. But if you take a look at the Shanghai here on the weekly chart, what you're going to see is the Shanghai just simply trying to make a 1-to-1 A to B equals CD down. So looks to me like and if you take a look at the weekly swing point, what you will see also is the weekly swing point on the Shanghai. Let me see which one's got the lower low. 2235, 2234. So until the Shanghai gets outside of the swing point from January 6, 2012, 2308, it really has not broken out, and it has more work to the downside. Let's go see what they're doing over in Germany, as long as we are around the world here. And if we take a look at that, let's see here. Oh, look who is showing up here. We take a look at the DAX here right now, folks. You got the DAX trading off 13 points, and still up, trading up near its session highs. Now, what you have to be careful with on the DAX, the signal here. So you're seeing a lot of markets that are coming in sync here. What I mean by that is patterns that are coming in sync. And so if we take a look at the DAX, it's got a 0.786 Gartley sell pattern. That is in effect right now. What the DAX is doing, it's taking on the swing point here. Number one, it's taking on the swing point for May 2nd. Ours happens to be May 1st. What it also is doing, it's taking on the gap down from April 3rd. Plop, plop, fizz, fizz. Oh, what a relief it is.
Oh, it's a beautiful thing, man. Great to be with you.
Good. You get that project done?
Yeah.
Okay, good.
We got it wrapped up.
Okay,
it's a beautiful thing.
Good.
So, yesterday we attacked the highs again. No juice. 650 million yesterday.
Even less than the volume on Tuesday.
I know.
Which was really, it was like, really?
Exactly.
I mean, it was a Wednesday. It was Weird Wally Wednesday yesterday, right?
So... Let's see. Weird Wall is Wednesday. Is option expiration next week?
I think so. Is it?
Yeah. Third. It would be the third Friday.
Okay. All right. Maybe it wasn't.
Yeah. No. It's wild, man. No
Still, light volume extraordinaire.
Yeah. Oh, there's no doubt. There's no doubt. And the key, folks, is that you get the light volume on the way up, but the bottom line is you're going into heavy volume from April and from May.
Yes, absolutely.
What I would love to see actually is I'd like to see the Dow tag the high.
Spike it.
Yeah. Because you got underneath it. You were at the lows of the high yesterday.
Yes.
So it's like, go do it. Do your duty for God and country.
I mean, certainly always the better reward risk trade is to tag the high of the swing point.
Right.
Because your stop is you can use a wide stop to enter the trade, but you can exit it pretty quickly.
Exactly.
If you get it close above it.
Exactly.
So you don't get
Which
taken
is sweet.
out.
I know. Exactly. And the small caps can't move, and Nasdaq can't move. What's Apple doing today?
Apple, if I switch over to Apple, I think it was maybe up $1 or something like that.
Yeah.
Apple up $4.
So
up $4.
We were going into 37 million yesterday with all of 8 million.
Yeah. So let's go see what Apple here is doing today, and volume-wise today, nothing much in Apple right now today.
It's just hanging there.
Right now today, you got volume of 2.4 million shares after a little over an hour of trading.
Yeah. Now
that's really nothing. I mean, we know volume will fall off, so that's like a 10 million share a day. Maybe less. You say 8 million, probably like yesterday, 8 million shares.
Well, you know what I would say? I would say that, and I started thinking about this yesterday, right? See, the two huge expansions, when have they been? Fridays, right?
Yes.
Yeah.
Oh, well,
so it's like, okay, are they going to try to hit us with something tomorrow? Do you know what I'm saying? No, sure. I know.
Sure.
Well, what you have, folks, is that most of the time, well, not even most of the time, your probability, your highest probability is that it's not going to be able to take out those highs, because if you're pushing into it with the kind of
when you start coming over here to these downdrafts,
exactly.
The supply line is pretty heavy.
Right.
The supply line is very heavy. And so, when you just start taking a look at patterns around all of the stock charts, you've got all kinds of tests on lighter volume.
Right.
And you've got, all kinds of Gartley patterns that are setting up. So it's going to be great, because these patterns are either going to work or we're going to have a colossal failure.
Right.
Either one is tradable.
It's cool. Absolutely.
So I don't, I just have to go clean my shorts again. But I can put on my long pants just as easy.
Oh, totally.
It only takes just a few moments.
Yeah.
Let's go to Dave in Boston.
Hey, Dave, what's going on?
Hey, Steve and Tom, how you guys doing?
We're doing great, man.
Fantastic. Hey, Tom, that seminar you did on the quality, volume, tick, and trend was outstanding.
I appreciate you being out there, man. Thank you so much.
Really love it. Hey, listen, I'm looking at the XLE on a 6-month daily, and we hit that May 1st swing point.
Yeah.
And wondering, you think are we going to get over that point, or is this a good short here at that level?
Well, I can tell you, I'm short the XLE right now. Now, what you're looking for, I think that was it, what's the volume? The volume is like 14 million?
Well, the volume at that swing point is 14.2 million.
Right, okay.
You know, today you've done 2.4 million. You came into it yesterday with 9 million, the prior day with 12 million. So, you know, volume is drying up on this as well.
Right. Well, you know what you can do, Dave? This is the way to do it. Since you're not in it, I would wait and, you know, hope that the high of that gets tagged. So the high of that is what price?
The high is 72.77. You're trading at 72.41.
Yeah, see that?
You're not going to have to wait that much.
No. So you'd love to see it get hit. If it closes underneath it at the end of the day, fire it away, baby, because then that'll be the failure. You know, and when you're that close, folks, the bottom line, just let it hit. You know, because the way it's set up right now is that it doesn't look like it would get the volume.
Right.
But if it gets the price, then the next swing point, that's where it wants to go.
Yeah.
So I just,
if it closes above 72.77.
Right.
Got it.
Cooking,
will do, gentlemen. I'll keep watching it.
All right.
Okay.
Thanks for calling, Dave.
Thank you.
You bet.
Bye-bye.
Yeah. So the King. King is having, you know, it's got some legs in it this morning.
And wide price spread. No, I know.
It does.
You know, so it's still early. What you have there, I like how we got the price spread this morning.
Yes.
Okay. Now we're going to need more juice. Earlier, I had 5,000 contracts.
Yeah, it's 10,000 right now.
10,000. That's not bad. Okay.
16,000 yesterday. And really, you know, it's all about this chart here. If we pull up the, if I can get it to refresh here, is the Euro chart.
Right.
So the Euro, you know, did what it was. Well, I don't know what that's all about.
Oh, that would be pretty. Okay.
Yeah.
Oh, so there we go.
Okay, so the Euro's actually doing what it's supposed to do, and that is, like, you know, when you take a look at these charts here, I'll put the daily up on the screen. So the Euro, what it did today was it pulled back to first the 0.382 level of the last leg up.
Okay.
So it makes that last move up, makes a little doji up there, get a close yesterday below, comes back to that 0.382 level. Then what I do is take a look at the 10-minute chart, or a shorter term time frame chart, and what it did as it was making that low on the 10-minute, it made one of my hammer candles. So, you know, it gets down to where it's supposed to, do that dead cat bounce area, makes a hammer, and now all that it's doing is what it should do, which is make a new A to B equals C to up. But it looks pretty weak at this stage. And so, you know, it's as soon as if that area gets taken out,
right,
the low of 1.22850, then boom, all the gas comes out.
No, big time.
And a really resilient market.
Yeah.
You know, not volume-wise, but certainly it takes all the bad news, you know, and churns it off.
Oh, it does. Oh, it does.
Which can be frustrating.
Well, that's the smell
of the market's supposed to do.
And that's the smell of QE too.
Yes. It is.
There's no doubt. That's the old whiff of 2008. No, you know what I mean?
I do.
You know, it really is.
I do. It's like it's hard to get off that crack out there.
Yeah, it's seriously. Hey, listen to this.
Yes.
This is pretty cool, folks. So when we were at this reunion, Angie's family this weekend, right?
Yes.
One of her sisters is a lighting designer.
Okay.
And a big high-end lighting designer. If you go into the new Carrabba's, have her lights.
Oh, okay. Oh, that's great.
And yeah, it's big time. And she was explaining to me, this is really cool. So the new deal, folks, in designing, okay, it's called biomimicry. Okay.
Okay.
So
what is that?
You're gonna love this. As soon as she said it, I said, "This is gonna be Fibonacci, man. I mean, this is gonna be patent." Well, sure enough, this is what it is. Listen to this. This is amazing. So what it is this, folks. These high-end designers, right, are now trying to mimic nature.
Okay.
Flat out.
Okay.
So I said to her, I said, "Well, we're talking Fibonacci." She says, "Yeah." She said, "We've always been talking Fibonacci." She says, "But now what we're trying to do is we're actually trying to get right into how nature designs, right?
Okay.
And that they're trying to design around that, so that when people are anywhere, like the lighting designs that she does, that you don't even feel them when you walk in. Just know that you feel good.
Yes.
Right?
Yes.
And I cracked up though, because we've been into this forever. And I said to her, and she knew it. And I said, well, that's not new. She said, well, it's new in design world. I said, well, we gotta get you into some Fibonacci. We gotta get you into some Gottlieb patterns. Isn't that wild, though?
Yeah. Well, no, I think that's been around for.
It has. Exactly.
At least those companies, that focus on. I mean, that was actually one of Steve Wynn's real claim to fame.
That makes sense.
Okay, so he first took over the what's the name of the
Sands?
The one downtown Vegas. But anyway, somebody will probably give me the name. But I can't remember. But then he went ahead after that success, after he turned that around. And he turned that around by creating a comfortable environment and obviously other marketing things. Right. But when he built the Mirage, in my opinion, as you walked into all of the casinos around there, the Mirage was the one that certainly I would walk in. And because I did business with all of them. I fortunately or unfortunately, the Golden Nugget. Yeah. Thank you. Yes, I unfortunately, had to go to, went to all of them, and that was the one where truly he had put together that level of comfort. Yeah, and it was the whole design. It was the colors. It was the height of the ceilings. It was where everything was positioned. I mean, and you felt comfortable.
Yeah.
And that's, don't want to leave. Which is, hey, you've done that here at TFNN. You've created the comfort zone.
That's a beautiful thing. I know. I like that. It's really wild, folks. There's no doubt. When I think about it, I absolutely just love coming in, and as soon as I sit in a seat, forget it, man. This seat or my own desk. There's something that definitely happens. Yeah. Okay, let's go, man. Let's go. Let's do it.
Absolutely. So going, let's see, to the upside, you've got Robbins and Meyer. That was a merger between National Oil Varco and themselves. So that's trading up nice 27%. And I think the merger side of it, you're going to the public companies that are out there. That's obviously what we deal with here. They are under what we have seen come in during this earnings season is maybe just making it or slightly below on the revenue side.
Exactly.
And you can't continue to do that.
No.
I mean, you got from Apple on.
Right.
At least for estimates. So you're going to, so you've got these corporations that are flush with cash, or those that are, and their way to expand is going to be done through acquisition. I think you'll start seeing the merger acquisition thing heat up.
No, that makes sense. Because they know if you could. The large companies, if they can buy the sales, they'll do it. Yeah. There's no doubt about it.
Yeah.
I mean,
because it's all about managing the stock price.
They got to grow or die. Exactly.
Yeah. If you're the CEO, folks, it's all about managing the stock price.
Right. Exactly.
The stock, and so it's just revenues and earnings. Simple as that. Doesn't matter how you do it.
No, it doesn't.
Because you do a merger 1 month and maybe people say, well, that's what it was, but then after the next quarter, it's forgotten.
Well, what is it now?
Just part of
you got it.
It's just, you got it. It's what's going on out there.
No doubt about that.
And then Monster Beverage, they disappointed a little bit yesterday.
What are they down today? Are they down?
Just down 7%. Now that's a stock that is always. There's so many rumors around that stock. I mean, they have the PR machine on Monster Beverage. I'll just put it up here. I'm sure it's up there, but done a few too many charts this morning. MNST is the ticker symbol. So it's going after a B point, trying to take out an A, B, C, D down out here. Yep. And let's see. So it's tagged the low. The low is 61.72, folks. That's July 23rd. That had 3.5 million shares. So volume, you've got it today. You've already done 5 million shares. So it's pushing down. It's going to, it wants to go further south.
And you know what it has? You and Rick, it has one of those dojis.
Oh, yeah, exactly. That's exactly.
That's a doji. Folks, when you gap away and you get a doji, it's really dangerous because it's going to gap away again. Yeah, I mean, this may be a free gap play to the downside to bring it to $45.
Yeah. Well, and it's got a gap out there. It's got a gap, so it says, clearly that's where it wants to head to.
That's intense, man.
Yes.
What about Priceline?
Priceline was having some troubles this morning as well. They're trading down right now. Well, they were PCLN, so maybe they've punched out. There we go. So Priceline with volume down yesterday.
Right. That's gonna.
I wouldn't want to step in front of this thing.
Not even close. Not even close.
This thing. If the market does turn, or when the market turns, this thing's going to have some more juice coming out of it.
Oh, yeah, no doubt. Steve Rhodes, Tom O'Brien, we appreciate all you Tigers and Tigresses growling and prowling with us out here. We get the Dow right now up 12. NASDAQ is up 9. S&Ps are up 2. We're going to be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us. Don't forget, folks, Steve kicks us off each and every trading day, 9 a.m. Eastern Time. We go live from 9 a.m. to 6 p.m. You can get all that content, folks, at tfnn.mobi on any mobile device. And then, of course, you can go over to the web and get Tiger TV.
So we got I've got the ES Mini up. I've got just simply the 10-minute chart up here, and so now the ES Mini here, not showing any bullish candles out here. So it wants to go tag the highs from late last night. So it's going to move up into the 1403.75 or so on.
You mean any bearish candles, right?
Yeah, no bearish candles.
Right.
On the way up on the short term, and the 10-minute chart has been showing some really nice patterns out there. So this thing is going to go attack its highs from last night.
Yeah, no, that totally makes sense too.
And
that very well could.
Now it has been interesting, because the pattern here the last couple of days has been push higher intraday, and sell off, into the close 2:33, 3:30 time frame.
Yeah. How are we doing with the DAX?
So the DAX here right now is just turned positive.
Okay.
So the DAX is now, and the DAX is is going up against. It's got a Gartley sell pattern out there. So as soon as I find that little tab on my screen, where am I?
Look at all those charts you have.
Oh my God! There we go. The world charts. The world charts.
Charts are ours.
Yeah. So you can see now the DAX, folks, closes in about a half an hour. So about 35 minutes. And you want to take a look at that. But right now, it's really just continuing to deal with this gap up here. So the low of the gap is 69.81. And you're trading out at 69.72.
Right.
So just dealing with that supply line too from April 3rd. Unfortunately, I don't get the volume. I don't get volume that you can.
And it didn't have juice. The last 2 days, I know what we had is that going into that April time frame, you're going in with about 30% lighter volume.
Yes.
That's a big number. There's no two ways about it.
Yeah, the king is backing off a little bit here, so it's only up 16 ticks. Now, gold and silver. So gold hasn't moved a whole lot here in the past couple of days. Right now, we've got gold trading up $3. Out at 16.18. But one of the things I was showing on gold is, this thing looks like it really wants to bust out.
Right.
So you got to get the dollar moving up.
I know.
And gold is moving up, and oil is moving up.
Right.
What's happening?
What's your
take?
No, I know. Well, I can see the gold deal, because what ends up happening, folks, is that even with the dollar moving up, the euro goes down. Gold's going to be at highs at euro currency, which is huge. Okay. Now the oil deal is a little bit different. The oil deal is to me, if the dollar's going up, oil's going to come down.
Yes.
It should. But maybe with the Middle East is going to blow up.
Yeah, that's really. So
when you look around,
yes.
I'd hate to be in the Middle East. These poor people in the Middle East. Every country. Our biggest problem is what? I don't even have one. I can't think of one, right? These people got to worry about being alive in the morning.
For sure.
And that's when you pick up the papers, folks, and you see a city, whether it's Damascus or anything else, and say, oh my God, in 1 second these people are getting a cup of coffee.
Yeah.
Next second.
A bomber or something. Yeah.
Well, you're really in a civil war.
Yeah.
It's, the dictators around are pretty amazing.
Yeah.
It's over the top, man.
No question. I think oil right now has got more upside potential than gold does, just as far as resistance and everything out there.
Okay.
Yesterday it kind of had didn't mean to do that, but yesterday had a little doji candle out there. And you actually had, I don't use necessarily moving averages from a trading standpoint, but I'm aware of them. And yesterday you had the 20 cross through the 50. That's a bullish sign.
Yeah.
Closes higher today. I think oil wants to run higher.
Oh, baby. Watch out. Listen, folks, you stay right there. We have Kate Stalter coming up from beautiful Tucson, Arizona. No, she's in Santa Fe. Then we're going to Tucson. Then Dallas.
That's right.
Then back here. Now to California. Then back here. Have a great one, folks. Have a safe one.